Canada's economy shrinks 1.6%. Will it bounce back by year-end? Canada's economy just took a hit. GDP shrank by 1.6% in the second quarter of 2025, marking the first decline in nearly 2 years. But what caused this downturn? And more importantly, can Canada bounce back by the end of the year? Let's break it down. In quarter 2, Canada's economy shrank at an annualized pace of 1.6%. That followed a revised 2% drop in Q1, meaning 2 straight quarters of contraction, a technical recession. The main culprit, US tariffs. Exports plunged by 7.5%, the sharpest decline in 5 years, hitting Canadian steel, aluminum, and auto manufacturers. Business investment also dipped, with machinery and equipment spending down 0.6%. Yet it wasn't all bad news. Domestic demand stayed strong. Household consumption rose by 4.5%, residential investment jumped 6.3%, and government spending increased by over 5%. So while the trade sector dragged the economy down, Canadian families and public investment kept growth alive at home. So, what's Ottawa doing about it? Prime Minister Mark Carney's government scrapped retaliatory tariffs on US goods to reduce costs. It launched a trade impact program, pumping over $1 billion into support for businesses hurt by tariffs. Canada also filed a WTO complaint against US tariffs and created a tariff loan facility to help large companies stay afloat. On the domestic side, Ottawa rolled out tax relief. The federal income tax rate for middle earners dropped from 15% to 14%. The consumer carbon tax was eliminated in April to ease household costs, and the ambitious One Canadian Economy Act was passed, removing interprovincial trade barriers and fast-tracking infrastructure projects, including a $3.9 billion high-speed rail link between Toronto and Quebec City. The Bank of Canada also stepped in. In July, it held interest rates at 2.75%, signaling caution. But Governor Tiff Macklem made it clear the bank is ready to cut rates if the economy weakens further. Markets now expect rate cuts by year-end, possibly bringing the policy rate down to 2.25%. But the big question remains, can Canada turn this around by the end of 2025? In the baseline scenario, with tariffs unchanged, Canada could see a modest 1% rebound in the second half of 2025. In an optimistic de-escalation scenario, if US tariffs are reduced, GDP growth could accelerate to nearly 2% by year-end. But if tensions drag on, growth could remain weak, closer to 1% for the full year, according to the OECD. So here's the bottom line. Canada's economy is bruised, but not broken. Strong consumer spending, tax relief, and infrastructure investments are cushioning the blow. If trade tensions ease and the Bank of Canada delivers rate cuts, the second half of 2025 could see a real comeback. But if tariffs persist, the best Canada can hope for is modest growth. Don't forget to like, share, and subscribe.